Hello, this is Chris Blasi. Welcome again to our third edition of On the Move. For those who were here before, you know this is our quarterly video where we look at the economy, the markets, and my co-host, Rich Checkan, will be with me again tonight. We have a special guest for you, which will be introduced shortly. Just so you know, some of the topics we're going to look at tonight are things that are really in the news, and I think most of us are thinking about them. And one of them is, it's not just a political or cultural thing, it's this war and this conversation about socialism versus capitalism. But you know, whatever direction this country takes is going to seriously affect your wealth and your future. And we have an excellent guest who can help speak to that and enlighten us on some of the ramifications on the different directions we may be taking as a country. For investors, we're also going to be talking about the strong dollar. Obviously, that's making and roiling the markets and its effect on the emerging markets. And we're going to, of course, look at some of our favorite asset classes like equities, fixed income, and of course, what's near and dear to Rich and I, precious metals. So I just want to introduce Rich again. And for those who hadn't been here earlier, Rich has a very unique background. I mean, prior to being the COO of Asset Strategies International, which he has been since 1996, Rich was an officer in the U.S. military, had attended West Point and spent 6 years and left the service as a captain. You know, Rich is also a prolific writer and speaker at numerous events globally. He puts out a weekly newsletter and, of course, a monthly at Asset Strategies. Hey, Rich, welcome to the show.
Great to be on again with you, Chris. And for those of you who don't know, the gentleman, Chris Blasi, who just gave that very wonderful introduction, I want to can that, by the way, is no stranger to the financial services industry himself. He's a veteran of the financial and technology industries with over 30 years experience. He's, aside from his background with major broker-dealers and boutique merchant bankings in the banking firms in the financial services sector, he's also worked in the technology industry, specifically within financial services and how they relate to each other. He's a recognized expert on precious metals, financial markets. He's kind of a go-to guy and has contributed to such publications you may have heard of, like the Wall Street Journal, Investors Business Daily, Market Watch, Street.com, USA Today, CNBC. It's a who's who. He's also the producer and host of the Great Reset Opportunity Report, which is an ongoing video series that he puts out periodically covering a wide range of topics. What we know and love Chris for is the patent on the innovative precious metals product known as the PMC ounce that we've been talking about quite extensively over the past year or two. We were introduced to Chris, learned about this product, and were wowed by it. I'm frankly shocked that somebody didn't get this idea sooner than he did, but he's patented 10 years ago. The performance is outstanding, outperforming gold and silver on their own over that period, and we're proud to be working with them on that particular product. Moving on to our guest. This is somebody I haven't known a long time. I met him about a year ago at Mark Skousen's Freedom Fest. But Jim Woods is known to many. He's a 20-plus year veteran of the markets with varied experience as a broker, hedge fund trader, financial writer, author, newsletter editor. Some of the newsletters he edits are the Intelligence Report, Successful Investing, Bullseye Stock Trader, The Deep Woods, which was formerly the Weekly ETF Report. He's co-authored books like Billion Dollar Green, Profit from the Eco Revolution, and The Wealth Shield, How to Invest and Protect Your Money from Another Stock Market Crash, Financial Crisis, or Global Economic Collapse. And he's ghostwritten a host of other books and articles. His articles have appeared, like Chris, all over the place. The names you recognize: StockInvestor.com, InvestorPlace.com, Main Street Investor, Market Watch, Street Authority, Human Events, and many others. Thing that kind of gets me going and excited about hearing what Jim has to say is, I don't know if people are familiar with TipRanks. It's an independent firm that ranks financial bloggers, and they've got Jim ranked number 3 out of like 6,000. TipRanks calculates that based since 2012. He's had 361 successful recommendations out of 499. That's about a 72% success rate with an average return of about 15.3%. positive. He also is known in professional circles as kind of a Renaissance man. That's how we kind of bonded at Freedom Fest a year ago, because he likes a whole bunch of different facets. He enjoys life. He composes and performs music. He's Western horsemanship, combat marksmanship, martial arts, auto racing, bodybuilding. He's got a BA in philosophy from UCLA. He's a former U.S. Army paratrooper, self-described, I love this, radical for capitalism, celebrating the virtue of making money. Jim, it's our pleasure. Welcome to the show.
Thank you very much. That's a well-crafted intro that I am quite grateful for. Thank you very much. It made me sound smart.
Well, you are, and I think they'll get to know that here tonight. I want to jump right into it because I don't know about you, but as you know, I'm flipping through emails, turning on the radio, watching TV. I can't do any of those things nowadays without hearing the debate about capitalism versus socialism. And, a famous lady from Great Britain once said that the trouble with socialism is that eventually you run out of other people's money. You guys might have heard of Margaret Thatcher. She said those words. Another great Brit had another quote that I read probably, a few weeks ago to a month in one of Jim's Deep Woods articles. He said, this is from Winston Churchill. He said, the inherent vice of capitalism is the unequal sharing of blessings. The inherent virtue of socialism is the equal sharing of miseries. I know, Jim, you've talked and thought with your philosophy degree on this issue quite extensively, to include in tonight's Deep Woods. And I want to kind of kick it off with you and kind of get your take on socialism, capitalism. What's the answer?
I mean, it's, in some respects, I'm glad we're having this debate as a country, because it allows us to kind of look at where we're at and what is the right course of action for the country. The only thing, well, the unfortunate thing at least, is we're not looking at this debate in terms of principles. Now, I've been writing about this for the last month or so in my Deep Woods newsletter. The way you have to look at it is, the way I look at it is, capitalism is not just, some freedom but some regulation by government and some kind of rules. I'm not saying that we shouldn't have some kind of rules, but we've got laws for that. We have too many laws governing companies, but that's a whole other issue. But the basic idea behind socialism is you don't own your own life. Socialism is a philosophy that says the state owns your life, or the state has the right to invade your life as it sees fit for the good of society. Whereas capitalism, proper capitalism, philosophically pure capitalism, laissez-faire, kind of unadulterated capitalism of the kind that I advocate, is the kind of capitalism that says you own your own life, you're responsible for your own decisions, and you're responsible for your own philosophic actions. Now, the idea there is you either sink or swim on your own, so to speak, but of course the byproduct of that is much greater benefit to society. And you own your own life in capitalism, whereas in socialism, you don't own your life. So if you don't own your life and the state does, what do you think they're going to do if they deem it that whatever you're doing is not in the interest of the public good? They're going to take squash it like a bug. And that's what's happened throughout history. Anytime, the ultimate byproduct of that is the gulag. Read Solzhenitsyn. Look at the history of China. Look at the history of Cambodia. All of these things are all byproducts of the idea that you do not own your own life. Of course, the main thing to read, there's two main things to read. If you want the dark side of it, read 1984 by Orwell. If you want the upside of it and the possibilities, read Atlas Shrugged by Ayn Rand.
Appreciate that. That's good suggestions as well. I'd kind of kick it over to you, Chris. Jim touched on it. He said that, look at some of these countries where socialism has absolutely failed. There are plenty of examples, and, why are we not seeing them? Do you have any idea?
Yeah, well, I'll take a little bit of a cynical look, and Jim is absolutely right. I mean, it's marketed to the public as just a way to bring economic equality, right? That's what socialism really wants to take you is a much darker place about control, about basically taking control of your soul. You're losing your identity, right? Then you become, it's about the state. You no longer exist. And that will never be broadcast to the public because I personally feel that it's a message that they want us to take a socialist path. This is where the elites, this is where the people in control, because with socialism, even though the masses are nameless and have no identity, there's the few who are in absolute control, which was the case in China and Cambodia and every other place where this horrific form of government, if you want to call it that, was put in place. So, there's a few voices crying in the wilderness out there, put out a few books, a few blogs, a video like this, but the message coming out to the masses through the mainstream media is conditioning them to accept it. That's why they're always talking about all the unfairness and, social justice and all these nice little buzzwords. And of course, our schools fail us miserably. I hate to be harsh, but that's my personal opinion, because it's just amazing that, kids could come out after 12 years of history classes and not know anything about Cambodia and socialism and the USSR and the horrific history of China. And I think if we look at what China's doing with the social credit system, right? That is Orwellian on steroids. And a lot of cases can be made. There's already things in place right now that are in the world right now that went beyond what even Orwell was forecasting. So, that's my overview and that's my take on it.
Yeah, I mean, that's an excellent point, Chris. And I'd like to add something on that too. Is you not only do you have the conditioning of the typical people like the Elizabeth Warrens, the Bernie Sanders, the AOCs, but now, I mean, this is not something new. But now you're hearing all these voices of people that are should be capitalist heroes, like Jamie Dimon, Warren Buffett. Ray, and the latest, of course, was the subject of my column today, Ray Dalio, who gave a critique of, it's not so much of capitalism per se as a system. What is more of a critique of is like you said, the income inequality. I mean, no one's for inequality, right? Sure. Everybody wants income. Everybody wants everyone to share as much as possible. But the fact is that if you try to make something equal, you make something unfair.
Sure. Because
life is not fair. We happen to be in a business that has more capital flowing into it than others.
Sure.
And some people do things that have less capital flowing into it. So just the economics of it is there's going to be less income for that person that chooses that line of work.
And I just have to expand on one thing you said. I mean, you talk about the quote unquote capitalists of our time, that they're speaking this social justice, because they're not capitalists. And this will go back to, we're not a capitalist system. When you're the head of a bank that's been bailed out, that should have failed right. because of the way you ran the bank, you're no capitalist.
That business shouldn't be rewarded.
Exactly. So you're a statist, a guy who is in a business who gets to sit at the top, and they'll never suffer the daily horrific life that a true socialist system will bring onto the masses. And they're going to go along and speak and go with the playbook that those who are even higher than them in the world of power, the real elites, they're really just the faces. They're not the superpowers. So we don't know what, the honesty, the only people that work in a capitalist society, who are true capitalists, are the guys who run pizzerias on the corner, right?
Entrepreneurs.
Who's going to bail them out? They have to compete with chains, and if the guy next to him is willing to work harder and cheaper and sell his slice for 50 cents less, he'll be out of business. I say that a little facetiously, but I think you know what I mean, meaning except for like the guy, the dry cleaners, the car wash, those are the only guys living in the capitalist system now.
Well, and those are the guys that, and those businesses are the kind that everybody trumpets as, oh, the small business, this and that. But guess what? They're the first person that the tax code hits hardest. Absolutely. When they start to put taxes on to redistribute the wealth. It's not that Jamie Dimon isn't going to get his taxes hit.
No,
it's that pizzeria guy. And by the way, that's spoken like a true New Yorker.
my take on this is a couple things. I see where this comes about. I know why it's happening now. People are not happy. We talked about this at the last quarterly webinar. People aren't happy. They don't complain when they're happy and everything is happening like they'd like it to. So there is a bit of social unrest out there. It's not just in the US, it's worldwide. And politicians kind of, they feed off of that. If they can get more dependent people, passive dependent people supporting them, then they have job security. They're around forever. So I know the lure for the politicians. I know the lure for the unhappy, socially unhappy, because, hey, here's an answer that's better than what I've got right now. And by the way, I don't have to do a darn thing for it. They're going to hand it to me. My biggest problem is, the dependence, but also the lack of creativity, the lack of growth going forward. Because when you're offered two options, work for something, make a change, build something for yourself, and hopefully get a return, take a chance, or sit back and collect a paycheck. What's going to happen to initiative? What's going to happen to growth? What's going to happen to the forwarding of everything that we know in a capitalist world? And granted, we are in a capitalist world. It's been a faux capitalist world. I think, Jim, you mentioned it earlier today that the last time we saw probably the closest thing to true capitalism was probably the Industrial Revolution. Right. Now, granted, there were casualties in that environment, but look at what came out of that, and look at the prosperity that developed as a result of that.
Exactly. I just have to say one thing. If you really just say, what is the U.S. right now anyway, more socialist or capitalist? My argument is it's way more socialist, because all the big industries, healthcare, that's functioning like a socialist, system, right? It's funny. There was an ex-senator from New Jersey, Lautenberg. He owned a company called ADP, right. And he made a comment that he would never be in a business that the government didn't regulate. Think about it. I think that speaks volumes, right? I mean, meaning, because once you're in and once you can lobby and become, part of that system, LinkedIn, and if they're regulating it, they're going to guarantee, right, that you have a flow of business, meaning like with ADP, because the government's constantly going to be putting out taxes and all that's going to be collected at the employer level, which will keep a company like ADP in business, right? As opposed to something that will displace that, right? Because government doesn't look for more efficient ways, right? Or they just like the way they do things and like to perpetuate it. So, but net, we're way more socialist than capitalist.
Real quick, just around the horn, does this get legs and grow, or does, do cooler heads prevail? Just real quick, and then we probably should move on.
Well, I would like to believe, the optimist in me would like to believe that capitalism can prevail, because another thing Churchill said is, Americans will do the right thing once they've exhausted all other possibilities. However, I am quite fearful that this is going to be a trend that's kind of, you can't go back on, because once you start giving things away, and and we've already done that if Obamacare was probably the tip. Now you notice that you can't even change Obamacare. People are screaming, "Oh, don't touch that! Don't do this!" And before, conservatives didn't want any kind of Obamacare, tried to repeal it. Now they want to leave it in place because they don't want to. You can't mess around with it because people are used to it now, and that's the unfortunate problem with it. So, I do have some ways that we can talk about later about how to leverage that in your portfolio, but I think that it might be here to stay, unfortunately. But I'm not going to stop fighting against it.
Amen. What about you, Chris?
So I'm along with Jim. I'd love to optimistically believe that somehow a light will go off, the light bulb will go off for hundreds of millions of people. I don't think so. I think we're in motion. I think we're going to have to go through a horrific time. We're going to embrace socialism, and then we're going to suffer all the ills of it. And eventually, there'll be a crash or a collapse a la Venezuela or, another country like that. But that could take some time. So I think, you'll, as to Jim's point, we'll always fight to get a message out and try to steer the ship another way. But, but you got to plan for the worst. And I think the plan is, this is the direction we're going. So then plan and prep accordingly.
Just my thoughts real quick. I think there's a huge populace of disenfranchised, unhappy folks that feel like they've been slighted. They're going to fight like the Dickens to make this go through. The politicians that are going to pander to them are going to push this through. I'm encouraged that I think on both sides of the aisles you're seeing pushback, that the vast majority of folks, despite the fact that capitalism versus socialism is all over virtually every airwave or means of information flow, I think the vast majority of folks are not on board with those far left principles. And I'm probably a bit more optimistic than the two of you. I don't think it's smooth sailing, but I don't think it's a lost cause either.
So there we go. A strong optimist and two lighter optimists.
Exactly. Well, I've told this to, we can move on after this, but I've told people that have asked me this question, and I said, well, regardless of how things are externally, you can control your internals. You can determine what you are going to do with your money and how you feel about it, how you approach the world. So being that that's the only thing you can control, you have to just be aware of what's going on and make the right decisions for you based on the conditions. There's an old Wall Street adage: you trade the market you have, not the market you wish you had.
Good point. Good point. And to do it while you still have the opportunity.
Exactly.
We're not to the point yet where you've lost those abilities to make your own decisions. And that's where people have to get past their inertia. And if they believe this is the path we're on, you have to act now. You can't wait.
All right.
Yep.
So where do we go next, Chris?
All right, so, let's talk about some of the other things. That was more of a philosophical look at things. And I think in the answers we're going to get, that'll always be factored in. But something that's really happening right now that is more directly affecting investments, let's talk about the dollar, the strong dollar. I think all of us a year or so ago in our respective publications and communications all felt that the Fed, even though they were talking about the Fed continuing to raise rates through 2019, I think most of us felt that wasn't going to happen. So but Jim is our special guest with some great insights and views. So what is your thoughts on the dollar? Where does it go from here? Does it continue to strengthen? And what do you see those ramifications based on your forecast for the dollar as it is going to be applied to the equities and the bond market?
Well, coincidentally, today, dollar hit a new 52-week high.
Mm-hmm.
So we all saw that. And that kind of dovetails perfectly into today's discussion about it, because I certainly didn't think the dollar was going to be as high as it was this year. It was not predicted. It's one of those things that no one really thought was going to happen. Then again, no one thought the Fed would go from hawkish in December to a 180 completely dovish as it is now. And it just goes to show you that the Fed is not immune to the markets. That they were looking at the data and saying, okay, well, we think we can still hike. But guess what? That choked off the economy. It choked off markets. People got scared. People started. It's the first bear market since 2008 in the first quarter. I think the first quarter was, 13.5% on the S&P negative total return in Q4. In Q1, it was 13.65% total return positive. So we're right back where we started from, basically, since the beginning of the fourth quarter. And all that had to do with the Fed, and also some incremental improvement in this whole Chinese trade situation. And so as far as the dollar per se, I've told people that the dollar is the nicest house in the ghetto. Okay, so we got a ghetto of horrible currencies. You got a struggling euro. You got a struggling pound because of Brexit. You have the yen, which has been struggling
Only since the 80s.
Oh, yeah, only since the 80s, exactly. Remember in the 80s when everyone thought that the Japanese were going to take over everything.
I was in Hawaii at the time.
Yeah, exactly. You were preparing
that's
to
when
fight
they're buying all the trophy properties in the U.S.
Exactly.
Right?
Exactly.
There's no question.
The Radio City in New York, everything. Right?
Exactly. Now that's no longer the case, of course. But so we had. I mean, it just goes to show how things can change without you knowing it. Almost overnight. And so I think, as far as my prediction is, the dollar is probably going to continue to be, at least hold its value here. And that, of course, has ramifications for U.S. equities because that's going to pressure earnings on multinationals. We saw that with Caterpillar today. They had lower earnings. We also saw pressure on Caterpillar because of the tariffs that they had to pay in Q1. So I know this because I am a fan of Caterpillar for a long time. They were one of my favorite stocks. I still own it, and I still like it, but it's facing headwinds. So that dollar strength is may hurt earnings in Q1. But so far we've seen earnings, and I don't know if we're going to be talking extensively about that at all, but earnings have been not as bad as feared.
Sure. Two-thirds, 2 out of 3 right now are coming in positive.
2 out of 3 are coming positive.
Against all predictions, I think.
Yes, that is. I mean, of course, the expectations game is a rigged game anyway. The companies throw out their, oh yeah, we estimate we're going to earn 20 cents a share there. Oh, well, guess what? We did 21 cents. They knew they were going to do 21, but I was on that as, that side of the ledger is well known. But the thing is, though, what we didn't need is another earnings-induced sell-off like we had in October, because that one of the things that triggered the October selling is PPG, and PPG came out and said, it's an industrial bellwether. We're going to have lower forecasts this year, and so people saw that and they started getting spooked. So what happened in October? Like a 7% decline in the S&P. So if I was worried that there could be another 7% decline in the S&P if earnings were similar to the Q4 environment. But so far they've been pretty good, and we've had some high-profile ones that are good, like Microsoft today, Facebook today, Twitter was good, was unexpectedly good, and we've had some misses too. P&G missed, J&J sort of missed. Just they had a lot of legal issues. But a lot of these bellwethers, it's been somewhat mixed, but they've been decent. I'm kind of encouraged by it. And we haven't seen the dollar pressure invade that too much in the multinationals. There's been some, but not as much as I thought there was going to be. So that's good. That's the good news. I guess maybe people are getting used to the fact that the dollar's, they're adjusting to it. It's been so high for so long now. But of course, the metals is what you guys specialize in. I'll let you cover that. But I know that's pressuring metals. And, just today we had like gold fall to 2019 lows. So, it might be a good buying opportunity now, but I'll leave that to the experts.
I'll let Rich, he'll expand on where he sees the metals in light with the strong dollar. So how about from the perspective of, we know the current administration, right? The Trump administration wants to bring some manufacturing production back to the U.S., right? And of course, strong dollar makes that a little bit difficult.
Right.
What do you think they're going to trying to be pressure the Fed to do something, or to weaken the dollar? Because tariffs on top of a strong dollar, that doesn't really bode well for onshoring production again.
Yeah, exactly. Well, the first thing they need to do is drop the tariffs.
Mm-hmm.
That would go a long way in actually helping bring back manufacturing. In fact, reduce the tariffs on manufacturing companies, reduce the corporate taxes on these companies, which they've already done. And that's the one thing that, not the one thing. I mean, the president's done some great things, but that's the best thing he's done since he's been in office, is that tax cut. That's reason. If that's the only thing that ever happens in the next 2 years or next 6 years, whatever, that it'll be worth the vote. You know, that you could say it'll be worth the vote. Although that's debatable, but I'm certainly happy with that aspect of the administration. But yeah, I mean, I think the president wants a strong economy, and he wants to stack the Fed. I mean, he wants to put like people like Steve Moore on there.
Mhm.
He wants to put people like, well, I think not. Who's the other guy that he was considering?
Herman Cain.
Yeah, Herman Cain. And actually, Herman Cain got a bad rap because he's actually been on the Fed. He's been a bank. He's been a Fed official. It's not like he's, you know, but of course the media was painting him like a, you know, like that pizza guy, as if that was some kind of like, you know, negative.
Well, this is the hypocrisy of the media.
Right.
Whoever let him get appointed to the Fed before, well, that was fine. But when Trump does it, whoa, now it's
yeah, exactly. Yeah. Whatever Trump does, of course, is going to get is the worst thing that's ever happened. Whether Obama did that in the past, or whether Kennedy did that, or any other administration. So, I mean, he definitely gets painted with the worst possible brush, even by somewhat conservative media too. Sometimes I try to look through all that because it's the only way to kind of be, but it's hard to, because you can't be an expert on every little detail of policy.
Sure.
But I mean, I would like the president to be more of a free marketeer, because he hasn't been the tariff situation and the idea that, you know, we want to have low or a Fed that's very accommodative. The Fed, we already got the Fed accommodative. He's kind of, you know, the president spooked Jay Powell enough to like have him basically say, we're not going anywhere in the next thing. And matter of fact, there's another
with no collusion and no obstruction, I might add.
Yeah, exactly. Exactly. Well, you know, there's another, if this might be the best time for me to bring this up, there's another thing that I think might be positive, you know, for risk assets and also for gold. And there's a talk now that the Fed is going to try to go to what's called a 2% average inflation, instead of like pegging the core inflation to 2%, because the core inflation has been like at 2% for the last 10 years, or below 2%. But that's been their target, you know. So as it started creeping up late last year, they started hiking, and then they choked off growth. So now they're backed off because they nearly inverted the yield curve. And that was part of the correction in stocks as well. So we have that. Now, if the Fed, they might do this in June, there's speculation they might kind of come out and announce that they're thinking about doing this, because that's been the rumor out there in the central bank rumor mill. Don't ask me how I
know there was one.
Yeah, well, you know, you got to be plugged in. But we know that when inflation is low, that's bad for bonds. I mean, that's good for bonds. And we know it's good for stocks, and we know it's good for consumers, and we know it's bad for hard assets and commodities. But if the Fed allows inflation, the average inflation to rise before taking any action, you could see 2.5% or higher inflation for an extended period. Well, guess what? That's good for risk for assets like gold, for assets like, you know, hard assets. It's, you know, it's not as good, of course, for bonds, and that's the one thing I'm worried about, because a lot of people are just becoming baby. They're about ready to retire. We got these big baby waves, and all of a sudden bonds are worth less than you thought they were going to. The bond payment you're going to collect is not as valuable because of inflation. Mm-hmm. So that's a big issue I'm watching as well.
Number one killer of fixed income portfolios.
Exactly. And we haven't had that. We haven't seen that. That's why people still want to buy bonds. But what happens if, you know, the inverse happens? Well, guess what's going to be looking good for portfolios? Gold, hard assets, some equities. So that's something to look. I'm going to be writing a lot about that, you know, beginning around June, because the June meeting is when they're going to start talking about. There's a conference in June that the Fed's going to have, and so that's something to keep an eye on, because if it looks like there's going to be a kind of a 2% average move, a move toward the 2% average, then that could be good for things like gold stocks, gold, things of that nature.
On the inflation note, could I just throw this out there? What impact do you think oil has with what's going on?
Yeah, that's the other thing.
Sanctions.
Yeah, well, see, there you go.
The imposition of sanctions.
Exactly. No, that comes back to our kind of that whole idea that we talked about, like prior to the webinar about kind of the government's hand in the markets and the government's, the manipulation that goes on with the Fed, with rates, with prices of oil. So, they lifted those sanctions, and that's going to be a supply, and that's going to, it's causing oil prices to rise. And everybody's seeing it at the pump as well, especially here in California. We already have the highest prices, and that's a negative side of living.
Take the snow, you could have the high gas prices.
Yeah, exactly. I have them, believe me. But that could definitely add pressure to the whole inflation situation. So that's a driver that is definitely merits keeping a look at. Now, the supply and demand situation for oil is been inflationary anyway, because we had like lower supply and higher demand. So we'll see what happens. But yeah, that's the kind of interference of it. And it's funny too, because the president has been wanting oil to be low. They actually did some kind of releases from the SPR, the Strategic Petroleum Reserve, earlier in the year to keep prices down. And now this is kind of counteracting it. I think it's partially an OPEC deal, but we'll see. But it could definitely spur inflation, and that could make the Fed act a little bit more quickly on this whole June thing. But now that said, the Fed moves at like glacial pace when it comes to things like that. So they're not going to immediately say, oh yeah, we're not going to raise rates anymore if we get 3% inflation. They're not going to do that, but they may gradually do that. So it's a gradual thing, but the markets are forward looking, as we all know. And so if we think that policy is going to change, especially materially after all this time, then that could be a very big driver and maybe unknown positive for a lot of different sectors.
Gotcha. Chris, your thoughts, anything out there to derail the dollar in its present form? We spoke with an asset manager that we've known for decades in Europe earlier yesterday, and basically he thinks that the dollar could strengthen maybe another 3% from here. What are your thoughts?
I would concur that in the short to intermediate, the dollar remains strong and probably strengthens even more. We know there's a lot of people out there that talk about the dethroning of the dollar and all the efforts being made around the world to diminish the dollar's role as the reserve currency. But like that saying, these things can go on for much longer than you realize, right? So even though there's been actions and certain trade deals, direct trade deals between like a China and a Russia, and these were all supposed to be to the detriment of the dollar. It's not really happening, and I think that you shouldn't be making placing your investments with the expectation that the dollar is going to be crashing in any time soon. So I think it's going to strengthen, but I also think there's the feeling that the dollar is completely coupled to gold, or gold to the dollar, right? So dollar rises, gold goes down. There are times though where there is a decoupling, and so I don't believe that all because the dollar is in a strong position right now and is probably going to maintain this position for a while, that's going to be completely to the detriment of gold. And even the other precious metals, they move on different drivers. But I'm going to put this back to you, Rich. What are your thoughts on gold in light of the dollar, and from the short, intermediate, and especially kind of maybe your forecast and expectations for the end of 2019, where gold's going to end up?
Okay. I actually wrote about this, so the folks that get our newsletter, Always Something Interesting, are going to read about this tomorrow. But Jim touched on it earlier. Dollar hit 52-week high today. What did gold do? You'd expect it would go down. It didn't. It went up. So did silver, et cetera. Now it's rebounding from a post-Easter correction that took it from above 1,300 down below. It didn't quite get to resistance at 1,260, and it certainly didn't close there. And it was right back up to 1,270s. I think today it closed somewhere around 1,278, 1,280, something like that. I have to look, but I was preparing for this. The bottom line is, if you look at all the different uncertainties that are going on in this world, and we've touched on just a small tip of the iceberg here tonight. There's folks out there that'll tell you that gold is irrelevant, it's weak, it's not doing what it's intended to do given all these other problems that the world is grappling with. There's another group out there that says, hey, it's manipulation. Okay, and conspiracy theories, whatever you want to call them, that there's the powers that be, and they're kind of dictating gold's destiny. And if they want gold lower, they'll make it go lower. There's others that don't take that kind of a hard line. They'll say, okay, so the bullion banks, have a position. If they see it nearing a point where it could give way, they might tip it over the edge, let it ride a little bit as all these stop orders get placed, and then buy it cheaper and take the profit opportunity. No matter how you look at it, there's reasons, I guess, that people believe that gold is not doing what it should do. I take a different standpoint. I see gold as strong here. And I know you're looking at me and saying, Rich, you're an idiot. Gold's tested 1350 how many times over the past few years, and it hasn't held. It continues to pull back afterward, and it doesn't hold that technical resistance level. But it's trading in a fairly narrow range for years now. And when it does dip in the face of the strong dollar headwinds and everything else, it doesn't collapse, or it hasn't yet. And it continues to build right back up. So the article I put out tomorrow is uphill in the mud in high heels. And that's kind of the way I look at gold. It's been walking up a muddy hill in high heels. It takes a long time for it to plod up and make some ground. And then in the blink of an eye, it's back down to where it started from. And that's been going on for some time. And that's the case if you're looking just in dollar terms. Right? Because that's how we in America measure gold, and money of the world does. But, when you have to buy gold in other currencies, you're not saying that gold is weak right now. Gold is virtually strong, or they would say expensive, in every other currency except the US dollar. Two best performing currencies right now are the US dollar and gold. So they're not completely inverse. They're both holding ground, and I think it's commendable, the resilience that gold is showing here. And I think it's important that you understand that in this consolidation phase, which is what we're doing, we're trying to break through resistance that was set on the downside falling from 1900. From 1900 all the way down to about 14 less than 20, there was no resistance. It was like a hot knife through butter. So it would make sense that we have to consolidate, build an incredible base before we leapfrog above that. But when you have such a strong, drawn out consolidation, you would imagine the breakout's going to be equally as forceful. And it's coming. When that happens, I don't know. I've seen revisions to estimates for gold for 1400, 1450. Somebody just came out and said it's going to make 1350 by the end of the year. I'm like, okay, well, it's done that a few times already. Big deal. I just think it needs to get to 1400 before people believe 1350 at this point. And I don't know if that's this year or into next year, but I do believe it's coming. So, I don't know. Do you have any thoughts?
Any thoughts on the next one, silver, for investors, right? That's the, and as you've probably seen, a lot of investors have taken sizable positions in silver with an expectation that silver will outperform. And this is to you too, Jim. I mean, what's your thoughts on the metals market?
That last commentary by Rich is why he's my go-to guy for precious metals. I don't know, but
you're not
all serious, But I mean,
don't depend on me. I don't need any dependent people.
Don't worry, I'm a
figure it out yourself.
Yeah, exactly. That's what I'm trying to do. No, I think that's a good point on gold. I think as silver too is in the same situation. Well, I mean, one commodity that I think could be, it has been good this year, and is copper. Now, I mean, I don't know how deep you guys get into the copper situation, but I've been watching copper for a while. I always watch it because it's Dr. Copper. It's got a PhD in economics. That's the old Morgan Stanley training that I had. I mean, you look at that and you can see that as copper goes, so too does risk assets. And we've seen that coupling this year. And it's especially interesting because of the whole China thing, because China is the biggest consumer of copper. And if a Chinese economy is growing, then copper prices are going up. If the Chinese Yeah, the building, you need it. I mean, they're going to do, and if China does stimulus, which they say they're going to be doing more of, although there's been a few articles lately that have kind of pressured that idea. I don't know if they're signaling that they're not going to do it or whatever. It's a very cryptic kind of situation in China over stimulus. But I like copper because if everyone knows we're going to get some kind of a trade deal with China. It's just a matter of, what it's going to look like in terms of the actual tariff reduction. If we see all tariffs reduced like immediately, that'll be a big bullish factor on copper and on risk assets. If we see what I think we're going to see is, there are going to be some tariffs left in place just to, for compliance purposes, then it won't be, the price is already baked in. Everyone kind of thinks that's what's going to happen. But you never know. It could be it could be a better than expected situation there, and that could be really good for copper. So I've been looking at copper a lot and seeing that. I was anxious actually to get your guys' take on copper because you're the metals experts. What do you think that's a good read on copper? Do you think that's going to continue, or do you have an alternative look at that segment?
Chris, you got any thoughts? I don't follow it as closely as I do gold, silver, platinum, palladium, but
sure. I don't follow copper like that closely, but I guess a companion in the sense that copper benefits in a growing economy, right? It's used, economy's expanding, there's building. So platinum and palladium kind of fall in that camp, right? Gold is your monetary metal. Platinum and palladium, especially palladium, used in catalytic converters, right? You sell more cars if an economy is growing. So there is a little bit of a linkage there. Right. The other thing that kind of separates platinum and palladium is copper is kind of mined all around the world. Platinum and palladium have their geopolitical dynamic to them. So the, I don't think I think that old adage is still accurate though, about Dr. Copper, right? Follow copper, and then you're kind of getting a good idea of where the economy probably really is going, as opposed to, the sound bites or the news that is just looking at really yesterday's news, right? They're always looking in the rearview mirror. So, I think it's, to your point, follow copper to get an idea of where things are going. It's been a pretty good bellwether for 50, 60 years or longer. But I don't follow it really close to make recommendations based on its actions.
Chris, you made a good point there. I wanted to amplify it just a second. The thing about economic indicators, a lot of times people don't realize that all these things like the PMIs and some of these, these indicators are just surveys. They're sentiment indicators. They're asking businesses what they think is going to be the situation, whereas the hard data is really what matters.
Exactly.
What kind of and one of the an interesting hard data thing is that there's something called the box indicator. Now, if you guys have heard of this, but they measure the number of boxes each quarter that go out, and this last quarter that indicator was down for the first time. So people are saying,
I agree. Things like truck sales, right? The class
light truck sales. They made a rebound in the domestic light truck sales made a slight rebound in March, but for a while they were trending lower, and from a 3 to 6 month basis they were trending, and that was a big warning sign. I was watching that to see, because that's real. Every small business in the U.S. uses trucks, or almost everyone. Yeah. But if they're not, if people aren't buying and upgrading trucks, that's a real world sign. Same with the box indicator. So there's we're operating in a milieu where there's mixed information all the time, and we just have to sift it out to see what the best kind of overall aggregate indicators are, along with the monetary indicators like equity prices, gold prices, the dollar, things like that. It's a big puzzle. But that's what makes it so interesting, because there's a lot of information out there, and then there's these political elements to it and stuff. So it never gets boring in our industry.
Well, actually, I think it's harder than it's ever been. I mean,
yes, I agree.
You mentioned we just met first time tonight, everyone. So, and it's been great meeting Jim. You had worked with Morgan Stanley many years ago. I was with Merrill Lynch, right? I was there in '91 through the mid '90s. It's much more complex now. I mean, it used to be a lot more straightforward back then, right? You'd look at a few indicators and you kind of knew where everything was going.
Right.
And there wasn't as much, we'll call disinformation or thought shaping or, management by perspective, which is what you have now. So it's a much more Herculean effort right now to distill and go through all the data, all the hard data, all the sentiment, and to make it a good assessment of things, right?
Yeah,
So
I completely agree with that.
if I could add to that, just in the metal sector, somebody was asking me, well, how come gold fell last week so quickly, or how come it did this, or what have you? Prior to 2003, you couldn't own precious metals through ETFs, exchange traded funds.
Exactly.
Post 2003, when it first came out, a lot of folks in our industry were really, as metals dealers, were upset. They thought maybe, they had sold out, that it's going to kill our business and everything else. I didn't look at it that way. I know my uncle Michael didn't look at it that way, or Glenn when he was alive, Glenn Kirsch. We looked at it as these are more people telling the story about something that we thought ought to be in everybody's portfolio in a little sliver, right? And nobody was complaining about the effects of ETFs when gold went to $1,900 an ounce in 2011 and silver went to almost 50. Nobody cared. They were all loving it. They didn't like the quick pullback. They don't like the quick jumps up and jumps back in the market. But you know what? Get used to it. When you have ETFs in a marketplace, there are going to be wild mood swings. Volatility now is a part of the landscape, and just live with it. It shouldn't take your focus off the long-term fundamentals, okay, or the reason to own it in the first place, which is not a quick get-rich scheme. Mm-hmm. It's about, having that golden anchor, that wealth insurance, et cetera, in your portfolio, period.
Yeah, I couldn't agree with that more. So exactly.
But it's going to be volatile, to get used to it.
Mm-hmm.
So
agreed.
I don't know. Should we? I know that prior to the show, we received a number of questions that were submitted to us. Rich, have them handy. Do you want to? Do we?
Yeah, and those listening, if you want to go ahead, there's a Q&A box. Just go ahead and type in your questions. We'll get to all of them, assuming we can get done before midnight tonight. But we have a few, and let me just pull them up here real quick because we had some sent in earlier. Okay, so I got the first question. It talks a little bit to what we touched on earlier. It says, everyone seems to be calling for a recession. How can I protect my portfolio if everyone is right? And that comes to us from Dave P. Wants to jump on that one. Are we going to recession this year, next year?
Well, I have not the crystal ball, but I would
have
say,
one. It's broken.
Yeah, exactly. That's you know what? It's funny because everybody's crystal ball is broken too. No one has a function.
Because what Chris just said, it's harder than ever.
Exactly. I don't think we're going to go into recession. I think the things, the catalyst that would have pushed us there would be a too hawkish Fed. That's off the table. Poor earnings in this quarter. That's pretty much off the table now.
And that was a surprise to me, I'll tell you.
Yeah, same here. I mean,
I thought when you took away the tax benefits and you had to look at just the value of the company in and of itself, I thought we were going to have some interesting times here.
Yes, exactly.
It's just not happening.
Yeah, and then the dollar headwind, like Chris mentioned earlier too. All those things I thought could be a possibility for pressuring earnings, but they didn't so far at least. So, I mean, there's two ways of looking at this recession situation. You can build a portfolio that has a great amount of diversification and that focuses on, like in my intelligence report service, we have a thing called a protection portfolio. It's some dividend equities, some gold, some short and intermediate term bonds. That's held up pretty well. It's more of a store of value protection kind of thing, though. It's not going to get you that alpha. But then I have another portfolio that has a lot of high companies that have high cash flow, paying, growing their dividend every year for the last 40, 50 years. That's the kind of dividend paying equities you want to be in. if there is a recession, because those are the companies that are like a J&J, P&G. Those are the companies that are going to actually keep on earning no matter what. So there's that traditional way of looking at it. The other way of approaching it is a way I approach it in my Successful Investing newsletter. Is we look at we're a trend following service, and it's a plan that's been based on, it's a 40-year trend following plan, something that existed before I even took the service over. And we look at the markets as an aggregate. We have a special indicator called the domestic fund composite. We look at equity prices, and we look at where they are relative to the 39-week average or 200-day moving average. And by doing so, we can tell when a good time to be in the market is and when it's a good time to be out of the market. So for example, in early October, we got a sell signal to be out of equities, and we sold. And guess what? We missed that whole slide in December. We sidestepped it completely. We got back into the market in early February, so we missed the bounce from January to February. But guess what? We got in the market at the same point as we exited the market. So we did not lose any ground. And that whole time we slept like babies at night because we didn't worry about the market just tanking, crumbling, and this becoming the next biggest bear market in U.S. history, because we were out of the market. So that's another way of approaching it. So people want more information on that. I know you're going to have my contact information in the links and whatnot. But that's how I would approach it. But that said, I don't think that the recession, the R word, is off the table for the short term.
Gotcha. What about you, Chris?
So I'm going to take a little different angle. Nothing is what it used to be, right? Things used to be much more straightforward, and recessions were defined, and things kind of all fell in a bucket and behaved a certain way once they said we're in a recession. First of all, even the indicators that are coming out, telling us whether we're in a recession or not, I think, so to make it simple, the individual's question is probably around, should I be in the market or out because if a recession's coming? My point is, I would stay in. I think regardless of what indicators come out, some will say we're in a recession, some will say we've got a robust economy. It's these things are conflicting. But I think the market will stay up, right? This is just my personal opinion, and I'm not an equities expert, but I'm just looking at the track record. I'm looking at it will be supported. I think corporations will continue to have good earnings. I think to Jim's point, I personally, right, this is just a personal opinion, I work hard to make my money. I also like to put a lot in dividend and in good quality dividend yielding companies, because I think for the long haul, it's going to work. I think they do fine. They'll continue to pay out during recessions. They always do. And if we do get some inflation, they always have the ability to kind of raise the price of the products. So I think there's a certain amount of protection there. I think there's a lot of money in the markets that wouldn't even have anywhere else to go, right? Going into fixed income is not really attractive. If the option was that you can go in a 2-year CD and get 9%, yeah, I'd worry about being in the stock market,
right?
Not with the rates that are out there. So my humble opinion is that regardless of the data comes out, some of it may be saying recession. I think the market is not something you need to flee, and I think you're better off just holding the course.
I've been speaking at conferences the past few years, and it hasn't been a pretty market for precious metals or gold in general over that time period. And my message has been pretty consistent. You don't buy gold to make money. You buy gold as wealth insurance. You want to make money, it's typically done with equities, okay? There's folks that got spooked in 2008, 2009 that still haven't re-entered the market. They missed out on all that growth for 10 years. At ASI, we believe in the three-legged stool. You tend to sit more stably on 3 legs than 2 or 1. So we like to have our portfolio structured so that we don't have all of our assets in any one currency, any one country, or in any one asset class or investment. We're not gold bulls and forget about everything else. Gold has its role, stocks have their role, equities, real estate, what have you. And I would also look abroad at this point in time. The dollar's strong. Other currencies are weak. They're uglier houses in the ghetto, as Jim would say. So the bottom line is, you have the ability with some dollar strength to diversify and pick up some assets at bargain basement prices here. And there are mechanisms in the system that allow you to get the heck out when there's a sign of danger. Put them in place, trailing stops and things of this nature. But continue to make money while it lets you.
Yeah, I agree with all both of you on that front. I also think that one of the biggest problems that people have is, and Chris, you mentioned this earlier, people see a lot of fear-based marketing, and they get afraid to do anything, and that is your biggest problem right there. If you're afraid to take action, then you're allowing fear to control your life. And I don't know about anybody else, but I'm not going to let fear control my life. It's just not something that I'm going to allow to be the motivating factor behind it. Now, maybe fear of missing out, that kind of thing is a legitimate form of fear. But even that is not really good, because you want to be in things, you want to be in good companies for good reasons. Look, I mean, no matter how much socialism and how much government BS, there's still a lot of people out there building a product, making money, and changing the world for the better. And you got to focus on that with your investments.
Yeah, healthy skepticism, doing due diligence, that's all valuable. Fear is not valuable.
Exactly.
Right? It isn't. No one functions well and performs well, whereas a contender if they're fearful. So
Exactly.
agreed.
There's a question here from Heather. I think we've already answered it, basically talking about some early surprises in earnings season, and can it be sustained going forward? Which sectors do you expect to perform best in the next 6 to 12 months? Maybe that last part we haven't quite touched,
Right.
but maybe we have. What are your thoughts?
You have to go with what's been working. So tech has been working. Cyclicals have been working, especially in the early part of the year. Bond proxies have not been working, utilities, whatnot, things like that. Now, there's one sector that I like. This is giving me a good chance to bring this up, because there's one sector that has been doing poorly, relatively speaking. And the reason why is something that we started off this webinar for. It's the healthcare sector. Why has healthcare been put under pressure? Well, you have Bernie Sanders saying Medicare for all. You have Elizabeth Warren, Medicare for all. You have every Democrat embracing the idea of Medicare for all. So if you're a company like United Health or another insurer, CVS or some company like that, you look at that and fearfully, like understandably, that would definitely pressure bottom lines if we did get like some kind of Medicare for all for everyone. But here's the thing. That sector is cheap as it's ever been since like 2010 right now. Like it's like 14 times earnings, something like that right now. I mean, certain subsectors like in the instruments and the hospitals, I think they're like 11 times earnings. I could be a little off, but they're very cheap right now. And so unless you think that we're going to get like a hardcore Medicare for all, like government-controlled healthcare, you think that's the case, and then you're going to be right. Then the current selling and the valuations are proper on the stocks right now. But if you think that policy is not going to be accepted by the people,
they've weathered this barrage before, have they not?
Exactly. We saw it with Obamacare. That was the last time in 2010 when they're fighting for Obamacare. That was the lowest the valuations of these stocks were. And guess what happened? They soared after that.
Yeah.
Way back when Clinton was president and Hillary,
yes,
talking about her plan, they all got hammered.
Exactly. And guess what happened? They all came roaring back. This is another repeat of history, in my opinion, because when you ask people there's been a lot of surveys about the healthcare segment, people saying like, well, do you support Medicare for all? And people say, yeah, that sounds great to me, And then you start to drill down and say, well, would you support it if you couldn't see your doctor? No. Would you support it if you had to pay way more in premiums? People say no. Would you support it if you had to wait like an extra 6 months to see a specialist? People say no. And all those things are consequences of that. So people look at it, oh, well, then you look at the support drops way down. there's like a 70% support for Medicare for all. But when you talk about what it actually will do, then the support goes way below like 40%. So
Hey,
that,
Jim,
no.
I had a friend in Denmark, and we kid him every year that Denmark. I think they were supplanted this year by some other Nordic or Scandinavian country, but as always the happiest people on earth, right? So I asked him. I said, "Well, why are you all so happy all the time? What's going on?" He goes, "Well, everything is taken care of." I'm like, "Wow, that's great. Everything's taken care of." I said, "But what exactly do you mean by that?" And he said, "Well, let's say, for instance, I got hurt. I go to the hospital. It's all taken care of, and it's all free." And I said, "Really? That's amazing. It's all free, and you're 100% taken care of, and it works so great. How much do you pay in taxes?" And I think it was 65 to 70% or something like that. I'm like, "Okay, free. I understand now."
Exactly. The interesting thing about the Scandinavian countries that a lot of people don't realize is they actually have a fairly pro-capitalist way of looking at the corporate structure, like corporate taxation, corporate freedoms. They actually, in some cases, have more corporate freedom than we do. And Chris, you talked about this earlier. We're like on the socialism side of things. Like they definitely have more services than we do here. So that in that respect, they're more socialist. But in terms of regulation and corporate taxation, corporate friendliness, they're actually better in many cases than Americans. And they know that that's their cash cow. Mm-hmm. So they don't want to kill the golden calf. So at least and it's also at a smaller scale. But yeah, I mean, there's no such thing as free, as we all know. No, Friedman told us that. But so just to finish up that part on healthcare, so there's a couple of ETFs that you can look at, like the traditional ones are XLV, and the Vanguard has a VHT. But the one that I like is called the medical device ETF. It's IHI is the ticker symbol, and so that's a good value play pick for this webinar that you can take away. And the reason why is because even if there is some kind of like issue with Medicare for all and that thing, the stocks like medical devices, medical technology, that'll still be there. It's going to be the health insurers and the kind of the legacy tech that's going to be hit the hardest on a Medicare for all. But there's still going to be like innovation. There's still going to be medical devices made, like life-saving things like that. So that would still be a good play, even if there was this. But as Trump kind of illustrated, you can have the biggest kind of idea like, I'm going to build a wall, I'm going to build a wall, I'm going to build a wall. But then reality of politics comes into play and there's no wall, And so healthcare, you could say, Medicare for all. And then they run into the reality that that's not very easy to get done.
Should he have gone with a moat instead?
Yeah, exactly. So, it's one of those things where, the pipe dreams of politicians are always bigger than they can actually get done, And that's a good thing for America because we don't want the smaller the government.
We don't want to write the check.
Yeah, we don't want. Yeah, exactly. We don't want to write the check either.
It's like when people would complain about gridlock in Washington, and
that's the best thing.
Exactly. Well, it's the best we can get. Let them just sit there and sit all locked up and have them create no new legislation. It's the best
exactly.
thing.
There was a report the other day about how this Congress had the fewest enacted laws. The last this last Congress was on pace to be like the slowest or the lowest number of new laws. I said, thank you.
Yeah.
That's exactly what I want. The fewer, the better.
Here's one. I don't know who wants to take first crack at it, but this comes in from Fred. He says, is there any currency out there that can challenge the dollar right now? Is there any up and coming home in that ghetto?
I don't think so. I could be wrong, but to me, the dollar is king still.
I would agree because there's only two majors, right? I mean, it's really the euro or the Chinese yuan. I think Chinese yuan is nowhere close to challenging the dollar. And with all our issues we may have here, I think Europe's got is a much more unstable place. And I think the euro is way more tenuous than the dollar. So no, I don't see any real challenger.
I mean, the one thing you could say as a potential outlier, I don't necessarily think this is the case, but you could make a case for cryptocurrency at some point becoming like, the go-to way of doing things. That's a libertarian dream, but because a currency devoid of of central banks and government intervention, but that's a long way down the road, and I actually don't think it would ever happen because there's powers that be that don't want it to happen.
And that's where I was going to go with that. I've said this from the start of crypto. I love it. I mean, if you could tell me that today we could replace government-controlled central issued fiat with a private sector solution, I'm in. It's just never going to happen because my personal opinion, the government's control for people is money, and they're never going to let it happen. If it became even a remote possibility, squashed like a bug, a gnat on the windshield. I just don't see it happening. And the purists say they can't stop it. I'm telling you, they'll stop it. Okay, so that's my one issue with that.
Yeah, I would just say the only way it comes into play is if it's a government-issued cryptocurrency.
Yeah,
that's the one thing that I think could happen.
And then
it's not a crypto.
Exactly. Coin or whatever is out there.
Yeah, exactly.
Yeah. I will throw this out though. I agree with you that China, Russia, whoever else is not nowhere near where they need to be. I think they're doing some of the right things. If you look, there's a lot of haters for gold out there right now. But the one group that's not hating gold is central banks. Central bank buying is at record levels not seen in like 50 years. True. Okay, so the central banks, specifically countries that are looking to de-dollarize, are taking steps to build up their reserves in gold in lieu of dollars. So they're moving the right direction, but they've got so far to go. So I agree, it's no time soon. The only currency that I think can rival the dollar right now is the only one that's hanging with it right now. And you know where I'm going with this. Exactly. This is gold.
That little shiny currency.
There's no question, in my opinion, it's the world's only real currency. Yes. But by Aristotle's definition, but I think that's the one that could rival the dollar, and I think it's just going to hold tight with it despite the headwinds of the dollar in its face.
I just have to throw in something because earlier you kicked off this meeting and you had a few quotes, right? Thatcher and Churchill, and there was a few adages, about Dr. Copper, and there's another one about gold. People that get of the faint of heart when the Bernankes or the IMF comes out and they disparage gold and a barbaric relic, can never forget one thing. The opposite of love is not hate, it's indifferent, and they are far from indifferent toward gold. So you just remember that. If it really was an inconsequential barbaric relic, it wouldn't even come up in conversation. But the fact that they have to come out and make an effort to constantly put that message out, it's like a game of poker where someone's bluffing, right? The guy sitting across the table, their bluff is, nah, gold's of no value. Our customers on the other side of the table getting a little faint, getting a little nervous, thinking, the bluff is working. Bottom line is it's a bluff. It's real money. And I think what rich is going to stay. Sorry to steal your thunder. What is the rival to the dollar out there? Well, yeah, it's gold. It's not the ruble. It's not the euro. It's not the yuan. It's nothing else. It's gold.
Yeah, and there's a reason why they decoupled gold from the actual dollar.
Sure.
Because they knew that it was dangerous if people just ate on the gold.
It was going to keep it honest. Yeah. It was going to keep it honest, and that's
exactly. They don't want to keep. They wanted to say, "Oh well, we don't need this. What this is holding our government spending back."
Absolutely.
Look what's happened to the value of the dollar since then in real terms.
Well, let's go back to how we said there's no capitalism in the U.S. If we had a dollar, if we were on the gold standard, and you had to bail out institutions like banks to the tune of trillions of dollars. You can't do that with honest money, right? Exactly. So you have to have dishonest fiat money.
Yeah, you'd have honest lending by banks and not this dishonest leverage that they took into that. So the whole thing goes back to the issue of manipulation and tinkering. And once you start doing that, the further you will get away from capitalism and the consequences of people's actions, the more kind of systemic risk you bring into things. And that's maybe the one thing that could cause a recession / market meltdown is when you get so much like what happened in 2008, when you get so much, risk out there that's not being adhered to because there's a safety net or there's some kind of issue that, well, there's moral hazard here. We don't have to worry about it.
Sure.
You know,
Like in the future, it's going to be all these big state pensions.
yes,
right?
yes,
When you know what's going to happen, right? They're going to come to the federal government and say, take Illinois, you need to bail us out, right? Now, in a capitalist system, it's like, well, that's a state issue, right? That's not a federal issue. Why should that expense be socialized to someone in Kentucky? Because your politicians bought your vote by giving you things that can never be paid
that's
for.
it.
But depending on what administration is in, right? If it was the Obama administration, I can guarantee you they'd be, giving tens of billions or whatever is needed to those sort of state pensions. But that's going to be a big thing, weighing on the dollar in the future.
Yeah, I agree.
See, this draws me back full circle to the whole capitalism, socialism thing. And I think one of the big issues that we're wrestling with here is, and I think it's been prevalent for a long time, it's a lack of accountability, lack of responsibility in our society. When something happens wrong, the first thing is, I'm a victim. It's their fault. Take responsibility. You do something wrong, you pay the price. I'm trying to think of that TV show where he said, don't do the crime unless you can do the time or something like that. Robert Blake, right?
Beretta.
Beretta.
You really?
And in real life, he figured that out too.
Yeah, of course. I didn't have to go into that. But the song hit it right on the head.
Exactly.
There's a lack of responsibility and accountability, and it's you can't look for somebody else to bail you out. That you have to take, like you said, Jim, your situation, your actions, your future, whatever, into your own hands. Do what you can. I think we're all on the same page that you do so with a kind of a diverse portfolio that allows you protection if one sector's down, the other sector's up. But you need a little bit of everything. It's not all inclusive. It's not just hit the home run and win, because most of those guys lose, and very few home runs are hit. Yes. When you look at the numbers statistically,
the best home run hitter strikes out the most too.
Amen.
Dave Kingman.
Dave
Yes.
Kingman.
Remember Dave Kingman? He
Yeah,
hit a
I do.
home run or he struck out.
Yeah, that guy. He also used to hit the most glorious home runs, man.
Oh yeah, he was an all-around guy. There was no singles and doubles with him.
Yeah, exactly. It's out of the park or it's a whiff.
Yeah.
So, do we have more questions?
Right now, I think that is it. And we're running about an hour, 20 minutes. We tend to always run over with the questions, but I love them. They're great questions. It's the only way we get to hear what clients are thinking. Any parting thoughts?
Well, I just want to thank you two for the opportunity to talk about these issues. These are the most critical issues that we can face as not only as investors, but as Americans, as human beings. I mean, we have to really decide whether we want to give into the social kind of collectivism or whether we want to fight it with individualism and with the idea that you own your own life and you're responsible for it. And it's at the principled level that we have to fight this thing, because the only antidote to bad ideas are good ideas. So Amen. Until we realize that, until we speak out about it, and until we invest for it too, because we have to put our money where our mouth is, we're going to be in trouble. So I'm telling my readers to do that. I'm telling everyone I can to do that, because there's no other alternative. There's either rational course of action or irrational course of action. There's either good for humanity or bad. And I think that's the whole socialism thing, collectivism thing is very bad, and we got to do something about it. So thank you for the opportunity, guys. I enjoyed our discussion. Excellent.
Great having you here, Jim. What about you, Chris? Any parting shots?
Yeah, I'm just glad to be on again and get together with Jim. This was great chatting with him. It's also fun to be able to laugh and have a few laughs during these rather heavy topics. The only thing I'll say is, having been through the 80s and all that, when you used to just have simple recessions and come out, I think our real challenges now are far more than that. Our worries aren't about a recession. I think it's this crossroads, this juncture we're at as a country, where we're going culturally. Are we going to stick to principles? We talked about that pioneering spirit that's completely gone, because now everything is a cry out of victimhood and to be bailed out. And I think we're at a critical threshold. And I think that is going to make investment decisions completely different, looking in the rearview mirror, using playbooks of what you may have used in 1986 about how to prepare for a recession and coming out. I think they're minuscule or little value right now. I think this is a much more big picture decision making, right? I think because the threats to the country, to the culture, to the economy are much more big picture and globalistic. We're using just boiling it down to socialism versus capitalism, but so I think it's a different methodology to make your decisions to prepare and to prep economically and personally. So, and I just encourage people to go out, get as much information from sources that you believe are as reliable as possible, but you got to do your own due diligence, distill it down, read between the lines, and but it's going to be a lot of work. You can't be lazy.
That's exactly where I was going, Chris. I think, if you want to influence people right now in this debate, argument, whatever you call it, don't lose sight of the fact that compromise is okay. I think we've lost our ability to disagree with each other of late, that everybody's got to be a polar opposite. I don't think that's how it has to be. Two, I would really work with people that matter most in your life. For me, it's my family, my kids, friends, relatives, etc., clients, critical thinking. Work on those skills, be able to read through all the garbage, and there's plenty of it out there, and make up your own mind. I'll give you a quick story about capitalism and how evil it is. I was driving my daughter home this number of years ago from soccer practice, and there was some news report about some company making astronomical profits. And she's like, what good is that when all these people are suffering out there? And I said, every year, the Economist puts out the little pocket guide, right, where they look at all the different rankings of different countries, economies, et cetera, and what they do. I said, take a look at the contributions, charitable contributions, and where they're coming from. Number one on the list, perpetually, is the United States of America. Number two, can't even find them. They're so distant a second. Capitalism generates wealth, yes. Some people look at that as a bad thing. I look at all the good that wealth does, and it's not mandated by a government. It's made by personal choice. We're one of the most compassionate countries on earth, and we have the means to do something about it. And I don't doubt that ability in Americans.
Yeah, the most good that has ever befallen society is capitalism and its byproducts. The most good that Bill Gates will ever do is creating Windows, not in giving the profits for Windows to third world countries. And not that there's anything wrong with that. And
it's what they're going to do with Windows.
He earned it, But look at how productive the world has been since the PC, and how many jobs and lives and how much wealth it's created for not just investors in Microsoft, but the world over. That is the good. The creation is the good. The ideas are the good, not the byproduct of it. So the byproduct of it is nothing wrong with that either, but it's the degree, it's the doing. That's what matters in life. So do it. Go out there and do it. Think for yourself, like Chris said, like Rich said, and don't let anything make you afraid of being the human being that you can be. It's your right.
Nice stuff. Jim, thanks for joining us. Chris, as always, absolute pleasure. I just will tell everybody just in parting here that, we haven't set the date. We're working on schedules for the next quarterly On the Move, and we'll be announcing that shortly. And for all those that attended and those that couldn't make it, we're going to go ahead and put the transcript or the podcast together, and we'll send it out via email along with contact information for those that liked what you heard tonight. We really appreciate you taking the time and joining in with us. Chris, last thoughts?
No, that's it. Look forward to hopefully talking to everyone again in the next couple months. At our next, we basically do this on a quarterly basis. So figure sometime in early mid-July. So best of luck to everyone during that time. Jim, great meeting you.
Yeah, you too. Thank you, Chris.
Okay. Good
Nice.
night.
Night.
Thank you all. Good night.